Alright, so I was saying now that suppose it is that the mirror sold me some flowers costing $510. She would record that transaction in her sales ledger, right? Now, she's selling me those flowers. I would have recorded that in my account, in my own account on the debit side. But the mirror is also going to have an account for me so that she can record in my account that she has for me the goods that she sold me, so that at the end of a particular period she can use that information to prepare a statement of account to send to me, so that I can be aware of how much it is that I owe her. Now, so because the sales ledger is always a credit entry, it carries one side, so it doesn't carry two sides like the cash book where you have a debit side and a credit side. It is only it's a credit entry ledger all the time. So once you record entries in the sales ledger, it is considered a credit entry, right? So any entry that is made subsequent to this entry would be a debit entry. So the mirror is going to record in my book the sales transaction there. So my account would carry a credit side and it would carry a debit side, right? Now, because she sold me some goods, sold me some flowers for $510, and the sales ledger is a credit account. It's a credit entry, or credit, it's always credit, carries a credit entry, carries a credit balance. Any account that is made subsequent to this one would be a corresponding debit. So in my account on the debit side, she would write, so say it's April 1, so here she would write 1st of April, and on the detail she would write sales, and it would be, so we're talking about the invoice number now, 2160, and the amount is $510. So I want to draw a cent column here, right? Now suppose it is that I made a payment to the mirror. Now, how that would be treated? Remember that the mirror has an account in her book for me, so that she can keep tabs on the transactions she has with me, right? So if I made payment to the mirror, which two accounts would be involved? Do you hear me say the cash book? If you said cash book, then that would be correct. So if I made cash payment to the mirror, it will be recorded in the cash book. On which side? Do I hear you say debit side? Right, so it will be recorded on the debit side of the cash book. And then in my account, which side would it be recorded on? If I hear you say credit side, then you would be correct. So, for example, suppose I should draw a cash book. I'm just going to draw something quickly, right, just to show that I made a payment. So this would be the credit side of the cash book. I'm just doing it quickly. I'm not going to put in all the columns, and this will be the debit side, right? So if I had made payment to the mirror, it would go on this side, right? The payment I made would go on the debit side, and then the mirror would record it in my account, right, on the credit side. So the payment would be recorded on this side that I made payment to her, right? So I just want to understand the basic concept. The basic concept is that in the rule of accounting, every credit entry carries a corresponding debit entry. Likewise, every debit entry should be followed by a corresponding credit entry. And that is the basic thing that you need to understand, and that's what you need to understand going forward. So let us now look at the example that is in the book, and I want you to follow with me. I am on page 257 of the textbook. Now here they are showing a transaction between Johnstown Music Store and Island Records, right? And so this is the scenario that they have here that I am showing you right here, and so it is right there for you to follow. And then we have the account being recorded here at the bottom of the page. Sorry for blurring that right there. So let us go with the first one. So here we have on January 3rd, Johnstown bought $400 worth of CDs from Island Records. Remember, what I want you students to bear in mind is that what we are looking at now, this is not Johnstown's book. This is not Johnstown book. What is being recorded here is Island's record showing Johnstown book in their account, right? So this is not Johnstown writing up their accounts. It is Island Records having an account for Johnstown and at their business, so that they can keep tabs as to what the sales transactions are to Johnstown and what the payment transactions are, so that at the end of a month or so, depending on the arrangement, they can see how much it is that is to be paid, and then they would send that detail using a statement of account. So here we have it where on January 3rd, Johnstown bought $400 worth of CDs from Island's Record, right? You send Johnstown an invoice offering a 5% cash discount if it is paid within 28 days. So let us see what it is now. So on January 3rd, here we have it. Let me put this over. On January 3rd, there's a sales transaction of $400 and it's recorded in Johnstown's account on the debit side. Why is this so? Remember, we said that the sales account is a credit account. It always carries a credit entry, and if the sales account always carries a credit entry, it means that every entry subsequent to that regarding the sales would be a corresponding debit entry, and that is why we have it like that, right? Then here we now have it on January 10th. A payment was made. Remember when I did the example regarding myself and the mirror just now, and I showed that, well, when the money is received by the business, it will be recorded on the debit side of the cash book, and then it will be recorded on the credit side of the customer's account. Here we have it, right? So the payment was made by Johnstown company. So here the Island Records have recorded on the credit side, right? That is showing the payment, right? Now we have it that on January 12th, it returned $100 worth of CDs because some of them had been damaged in transport. Now remember, going back now to the debit and credit note, remember we said that the debit note will be sent by the customer, and then the supplier or the seller would have sent to the customer a credit note, and the credit note essentially would have reduced the amount that the individual would have paid. Now, remember, if you look here, when Johnstone paid the $400, it reduces their account, right? So when the returns have been made, this entry here, the sales return, would have been reflected from the credit note, and that too would have reduced the amount. So it goes on the credit side of the customer's account. Let us look now at the other entry here. We have on 18th of January it bought $1,000 worth of CDs. So what we would have, this book, the textbook here is just showing Johnstone account, right? It is not showing the entry as it would have been made by the sales ledger, right? But I want you guys to remember that even though they are only showing one side of the account, so they're only showing you the debit entry made in Johnstone Music Store account, you must remember that for this debit entry there is a credit entry. For this debit entry here, there's a credit entry, and this credit entry would have been in the sales ledger. Okay, so then there we have it. And then they said on the January 27th it paid, and it is already referring to Johnstone, right? It paid $500 as part payment, and so this 500 is recorded here on the credit side of Johnstone account. And I want you to remember that this credit entry, the corresponding debit entry to this credit entry, would have been that payment of $500 on the bank account of the cash book. All right, and then that would have been the last entry. Here is what happens now that they are closing off the account at the end of January. So remember I said that the CD is the difference between the credit side and the debit side. So when the debit side was added, it came to $1,400, and then when the credit side was added, there's a difference of $400, so that is called balance CD. So the difference is $400. Then the account is closed off. Both sides must be the same, and then this corresponding CD is on the credit side is a corresponding BD on the debit side. So if the transaction continues between Island Records and Johnstone, then for the month of February the account would be showing that Johnstone Records owes Island Records $400, right? So if they are going to send a statement of account, that is the amount that they will show. Now this at the bottom of the textbook on page 257, it says the balance, to balance the account, add together the debits of $1,400 on the left hand side. So it's basically explaining to you how it is done, right? And so we can now send out a statement to Johnstone Music. The statement will look like, and they are gonna just show that one on this page. So the statement will look like this one, right? So the statement will show the transactions. It will show, so this one would have been the first transaction of $400, right? And the payment that was made, and the returns, and the sales transaction of $1,000, and the payment that was made of $500, right? So that is what the statement would look like. All right, so there you have it.